Okay, welcome back from San Francisco at the Hard Asset Investment Conference. Big Al is chatting with a guy who I've known for 2 or 3 years. I've known his father quite a bit longer, but I've known Chris Berry probably for about 3 years. Very, very interesting young man. Works with his dad now. We're going to talk a little bit about politics. And the reason I asked Chris to weigh in on this subject is, you know, you always hear from the old guy. You always hear from Big Al, who's about 5 generations ahead of Chris. We're gonna hear from a younger generation, for lack of better terms. Chris, I have a question for you. Now, you're a real Ron Paul fan. You know, you said, in your opinion, one of the most interesting books you've read is "End the Fed," which the congressman just wrote, came out recently. What do you think about the way politically and hence economically our country's going right now?
Well, obviously, who was it? Somebody said, you know, a house divided against itself cannot stand. And I think that that is where we are right now in the United States. I think it's a real problem. I think you've got the far left and the far right that have dug their heels in on a whole host of issues, whether or not it's entitlement reform, tax rates, you name it. And there's, many of us that are more practical and pragmatic, and we're in the middle, and we can see that, you know, both sides are going to have to give.
I find that, I need to interrupt you just for a second, because I find that statement to be very, very interesting. People like you and I are willing to give and take. I don't see that happening on the part of the administration, although I'll bet he does. And quite frankly, I see it more from certain elements of the Republican Party. I think Boehner's willing to compromise.
It seems like he is, and it seems like he actually was when they tried to do the original budget deal. And then, you know, the Tea Party and I think some of the more radical elements in the Republican base, if you will, that might be a strong phrase, but, said, get in line with us. And so that crushed that original budget deal. That's one of the things that always attracted me to somebody like Ron Paul, who, was kind of viewed as an outsider, if you will, and I think that was actually a breath of fresh air inside the Beltway.
Oh, I think it was a total breath of fresh air. You know, I have to tell you, we've spent a fair amount of time talking about the congressman this past week. He gave his farewell speech on Wednesday. Put the text of that up on our site. Did an interview with Jeff Deist on Thursday, basically talking about what Ron had stated. What I find to be interesting is politicians aren't willing to state the truth, and he is.
Right, and it's just unfortunate, I think, that he was never able to gain more traction on a national level. I think that, a lot of his support came from the youth. You talked about, different sort of decades of experience. I mean, it's just in some ways unfortunate that you have so many special interest groups in this country, and they're all afraid to, give a little bit. And I think, unfortunately, the end game would be, giving everything away when instead, they should be willing to compromise.
And unfortunately, they're not. Now, the million-dollar question is this, and that is, we have a number of events going on around the world right now that are paramount to investing. The most obvious short-term is, well, I'd have to say that the Middle East right now is the most obvious short-term. That's a pretty tough situation over there. But then in December, you got the fiscal cliff coming up,
right.
And it kind of goes on and on and on. I personally think that in the short term, the investment community is going to be a pretty scary place. But I think sooner than later, rather than later, perhaps in the near midterm, I think this whole thing is going to turn around, and I think hard assets are really going to come into vogue. What do you think?
I would agree with that. And, it depends on, you've got, I think, 2 arguments to be made with respect to investing in the commodity space. There's the precious metal argument, and then there's the industrial metal argument, and they both have pros and cons. What's happening in the Middle East has implications for hard assets. It has implications for oil and all sorts of investing. It's sort of a tough call. I certainly think until the fiscal cliff issue is resolved, and who knows what that's going to look like, I think you're going to see a lot of money on the sidelines, and I think you're probably going to see a lot of selling as well, because at the end of the day, cash is king, but longer term, I see it as very positive for gold and silver.
At the end of the day, cash is king. Yeah, there's no question about that. People have to look out for themselves and their families. A conclusion that I came to, and I don't know, you may throw the microphone at me as soon as I say this, but here's an interesting conclusion that I came to. I I don't really care for the direction that I believe our country is headed. I think we're looking for more big government. I think we're looking for more social programs, et cetera, et cetera. The reason I don't like that direction purely and simply is because I don't believe we can afford it.
Right.
If somebody could show me that we could afford it, I mean, nobody's a bigger pushover than Big Al when it comes to helping people. But I simply don't think we can afford it. My question is, what's the answer?
Again, I think the answer lies somewhere in the middle. You know, tax cuts, which, again, is something I'm traditionally, typically in favor of. You know, whether or not it's tax cuts for the rich or just, you know, broadening the tax base, whatever you want to call it, that alone will not solve the budget problem we're in. So, but then, you know, again, the other side of the coin is cutting spending isn't necessarily the only specific answer as well. I agree with you that we've, you know, in essence, become an entitlement society to a certain degree in this country. So I think at the end game, it's going to be tax reform as opposed to tax cuts, and entitlement reform as opposed to entitlement cuts. I mean, another perfect example of you know, entitlement sort of gone awry is, of course, this morning, for anybody who watched the news, Hostess, which is the maker of Twinkies and Wonder Bread, liquidated. So there are no more Twinkies anymore. Now, that's obviously, I'm saying that tongue-in-cheek, but, you know, the more serious issue is that there are 18,000 jobs that are going to be lost now. So that's the bigger issue. And the reason why that happened, based on the preliminary reading that I've done on the subject, is because the unions weren't willing to bargain and negotiate and reform. And so now those jobs are gone.
I find that to be absolutely amazing. You know, we had an event like that at home, on obviously a much smaller scale, but it's a really good example of what's going on in the business community right now. We live in an area called Simiamu. Simiamu had a 5-star resort, you know, mile and a half down the road from where Kathy and I live. Closed the doors. They're closing the doors as of November 30th. The bank called a loan. They're simply, and 200 and some odd people in a small community are now going to be out of work. That's going to affect our city, which is called Blaine. They're going to lose literally 7 figures of revenue coming from the tax base because of that. I mean, the snowball is getting bigger and bigger.
Right, right. And you're absolutely right. There's always a ripple effect. You know, when these businesses go, you have to think about the restaurants and everything else that, you know, derive their livelihood from these businesses that are gone now. You know, in the long run, I fear for my future to a certain degree, but I feel like I'm taking control to the extent that I can through investing, and I really actually fear for the future of my children. And, you know, I'm not somebody who is a fearmonger or anything like that, but you just sort of look at where we are as a country and compare us to a country like Norway. You know, in Norway, they have such a surplus because of all the oil revenue and because they manage it a certain way that when you're a Norwegian citizen and you're born in Norway, you're automatically, you know, you've got $200,000 going in your favor, if you will. However, excuse me, in this country, it's the complete mirror opposite. When you're born in this country, you're already saddled with a very large and growing amount of debt.
You know, there's absolutely no question about it. And the million-dollar question here, quite frankly, I want to chat about this with you more in depth on a daily editorial. But the interesting question is, what's the solution? What is the solution?
I think we know what the solution is. The solution is compromise, and everybody is going to have to give a little, whether they want to or not, or whether they realize it or not. And my fear is that, you know, we go over the. I don't know honestly what next year is going to look like in terms. Maybe we're sitting here talking and it's a completely different ball game. I mean, it's very hard to really know for sure, but. You know, we're focusing a lot on the fiscal cliff and what's going to happen in the immediate term, but you're absolutely right. I mean, there are other hot spots throughout the world. The Middle East, you know, you're seeing GDP, for example, dry up, and the traditional engines of economic growth being, of course, China and India and other countries as well. So I'm not really sure.
Best thing that I can say that I'm really sure of is we have to protect ourselves. And the best way that we can protect ourselves, as I continue to say over and over and over on the show, is, number one, stay informed. Number two, invest wisely so you can protect yourself and you have a foundation. Big Al's going to be right back.